Hello everyone, I hope that you're doing well. Welcome to the fourth lecture of Sushi Uncensored. This is going to be a very short lecture because I'm going to showcase something to you. It's about the environment section. Here we are on the 1 minute chart of Nasdaq. And what we can see is the following. I'm just going to put the 90-minute cycles for us, where we have 7 to 8:30 and 8:30 to 10, and of course 10 to 11:30. What I want you to see is the following. You might look at this as, okay, perfect long setup, right? BC, go long in that. Yes, I would be looking for longs and I will be looking for longs and I will take a long trade. However, what I want you to understand is the following. This is by no means a very high probable environment, and the reason why is due to the following. We have seen Nasdaq take out this buy side liquidity here, above this high, right here. Yes? We have seen that buy side liquidity get purged during the second AM cycle. So AM2 purges AM1. It then reverts lower and manipulates lower, yes. What we see then is that it fails to take out the AM2 low during the third AM cycle. When we take a look at ES, we can see that ES took out the AM2 low right here at 10 o'clock. This shows that manipulation has taken place. However, if we take a look at the following, we can see that ES never took out the first AM session's respective high, whilst Nasdaq did. Oh, wrong chart, I'm sorry. Whilst Nasdaq did here. So to me, we can see the following. We see SMT on the lows and we see SMT on the highs. This all signals that Nasdaq is a stronger market, and therefore I will look to go long on Nasdaq as well. However, I know that if we look at it intermarket relationship wise, this is by no means a high probability environment, and that's why you also will see me execute on a paper trading account and not on a live account today. Not a fan of the environment, and therefore I'm just going to showcase to you that inside of a rather questionable environment, it's better to just stay in demo and move from there. I anticipate this to be a rather ugly run and a high resistance liquidity run environment. Here you can see that buy side liquidity that has been taken out on Nasdaq whilst ES created those lower highs, and on the lows here you can see that ES created lower lows whilst Nasdaq created higher lows, and that's something I am not a fan of. So let's go to Nasdaq and let's take a look at this delivery. As you can see on the bottom here it says paper trading. Again, this is not an environment in which I would try to push it. So let's zoom into this delivery. And let's see whether or not we are going to see a run higher. It's having some trouble with breaking through the 18,900 price level, as we can see here, but that by itself is not a big issue because, of course, at such a level we can anticipate some resistance. But the moment we displace through it, I anticipate big green candles to come. Therefore, I want to see speed and velocity above this high. Hey, calling expansions. I want to see speed and velocity above this high. Let me just make sure it's annotated properly. Might be wondering what's this red line. We will take a look at that in a bit. Targeting the previous cycle's high. And maybe even higher. I'm rather bullish for today. However, I know that we have seen pretty big manipulation lower. 930 opening price is right here. So therefore, we might be able to see a rather explosive run higher come after this manipulation leg lower. I went long inside of this BC, but that's not what my eye was drawn to. My eye was drawn to this downward candle. I want to see that function as support on price. This big wick of a candle right here. We trade above it, and now I want to see it function as support on price. We closed above it, I should say. If we did not see that S&P on both sides of the marketplace, I would be all over this market just buying it. Why? Because everything is signaling to me that from the 9:30 opening, the ones that have been making money are the following. The people that were short. They have their stop losses above this high, above all of the highs that formed afterwards. Therefore, I anticipate big green candles to come in a bit. You can see me annotate high resistance grid run environment until the time is right for the market to deliver up close candles aggressively. I want you to see how there were three purges on sell side here. First purge, second purge, third purge. This is called the three drives pattern, and it's pretty common in reversals. When you see it and when you study it, you will see that it occurs quite often inside of market reversals. Notice how the bodies are closing inside of this BC's price range, not closing outside of it. The wicks are doing the damage whilst the bodies are staying inside of it. That's an algorithmic signature that shows to us that order flow is bullish. I want to see speed and velocity begin to get delivered above this high right here. If the market gets overzealous and it trades with speed and velocity above the previous cycle's high, then I anticipate it to draw towards the equilibrium of the next range. Equilibrium being, of course, at around 950. Buying it here. Stop is being trilled. My stop is being trilled because we're seeing a new BC get formed. I want to see the market begin to deliver towards the upside rather aggressively soon. Investigate how the market will react off the open of this down cross candle. At this point, the market should never trade below this candle's low again, because this candle's low created this small inefficiency that got formed. Here are people that would trade simply based on the closure outside of a CB, or outside of imbalance, I should say, outside of this BC, are likely to get chopped up because I'm anticipating those higher prices, and I know that we have order flow on our side. We anticipate higher prices to come, and therefore this is what I'm monitoring. This is what I'm actively looking for. And there the market fails to expand towards the upside. It's in close proximity to the stop, but notice it hasn't taken it out yet. Notice how these candles are opening up and delivering lower right away. Patiently waiting, and there the stop gets reached. Now I'm very curious to see whether or not they're going to still form a low here and then continue to the upside. But everything is not signaling to me anymore that that is going to occur. Instead, this indeed looks like a questionable environment. And I'm happy that I got stopped out and that I went outside of it. That is why I simply paper trade today. That is why you did not see me log into my AMP live account, because I recognized that the environment itself was questionable. And that's the main takeaway from this lecture. That's something I want you to learn. That's something I want you to basically, yeah, just investigate on your own going forward, in what environments things are high probable and in what they aren't. So I'm very happy with the fact that this is just a loss on a paper trading account. If I would have logged into my live account and would have taken a loss here, I would have been beating myself up, not because of the loss, but because I know that this environment is questionable. And what makes this environment even more questionable is that from the opening right here, now towards the opening, we dropped aggressively lower. Yes, trading into this red level. This red level was Monday's low right here. We took that out, yes, and we then saw this delivery higher. However, notice that this curve, this sell side delivery, is very messy. You see, we have a high formation here, potential ritual consolidation. We go sideways, 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 manipulate towards the upside, and then immediately drop lower. When you see such a drop lower, the next delivery is likely going to be very messy. And that's why I am very happy with the fact that I managed the position the way that I did. And I think you learned something from this already, from this breakdown. I think the environment section itself was very good. I shared with you why I deemed this environment itself not high probable at all, simply due to the fact that we saw that large drop lower S&T on both sides of the marketplace, and then this is the delivery that you can anticipate, where you see this back and forth price action, back and forth, and the failure to expand with speed and velocity above this high is exactly what one needs to be aware of when looking at such an environment. We broke above 18,900 and we failed to display towards the upside. That right there shows an unwillingness to deliver. I will simply monitor delivery for now, remove some of the annotations, and then we can move from there. I'm getting called. Alright, here I am again. I got a phone call, so I had to pause the recording for a moment. It is what it is, but hey, the delivery itself didn't change at all. Just monitoring to see if Nasdaq will manage to stay above this BC. What's rather interesting to me when we take a look at this delivery now is that when we compare ES to Nasdaq, is that ES create a lower low relative to this low, whilst Nasdaq did not. Here you can see that. So it looks like they're priming Nasdaq to move higher. Look at the time as well. Our time of interest, the macro window, is nearly coming up. So that's something to be aware of. Where ES is continuously making lower lows, Nasdaq is continuously making higher lows. That's something to be aware of. I'm gonna go long inside of the retracement into the high of this candle with a stop being below it, anticipating that the time is right now for those higher prices to come, for the market to move outside of that consolidation. Going on inside of this respective candle. If you can zoom in here, you see that this candle's high never got traded into by this candle. They just stopped it. I believe if we take a look at the prices, a quarter of a point in front of it. But if we look at the 15-second chart, we can see that the market breaks through that high. And the moment that the market opens up and delivers lower, that's a buy into a discount. And on the lower time frames here, inside of this downward candle, there's a 15-second inversion for value gap. And that's something I went wrong of. Notice I decreased the amount of contracts for the initial position. Where initially I went wrong with 3 contracts, I now went wrong with 2 contracts because for the day I'm in drawdown on this demo account. Now, I'm still looking to see whether or not we're going to see big upclose candles above this high. I want to see big upclose candles come, speed and velocity. I anticipated immediate rebounds to take place, but they simply failed it by a quarter of a point. And it is what it is. I hope my audio is being picked up properly right now. Notice that this candle right here is the high of 1031. I want to see if the market will find support inside the price level. At this moment, in my mind, my stop is already trailed this candle's low, because this candle's low should never be broken through again if we're going to see higher prices. I want to see how the market is going to react to this upclose candle. I want to see big green candles come in soon. That's the type of reaction you want to see from such a candle's respective high. I'm now actively monitoring to see how the market is going to react of the next few candles. (9:30) opening price is here. When close proximity to it, notice we stop right before it. Why do we stop right before it? Because we took out the buy side liquidity above these two highs here, where retail minded traders had their stop losses. So we took out the buy side liquidity, and now we're just spending some time retracing, and I'm monitoring to see whether or not we're going to see that continuation higher take place. I believe it's gonna come soon, and as long as we stay above this upclose candle's price range, I think it will come. I like how ES is also following along with Nasdaq, so that's a good sign. I want to see speed and velocity through the 9:30 opening price once we trade through it. And at this point, it's simply a waiting game, waiting to see if the market will deliver. I believe they did everyone rather dirty with this leg lower. Maybe I trailed my stop too aggressively. However, I'm really not a fan of the way that they did this run lower, but it also just signals or it showcases why this environment itself was not preferable or is not preferable. And that's why I'm so happy that I'm simply on a demo account today or this session. Simply monitoring and tracking price. And that doesn't mean this lecture becomes less valuable, because as you can see, the market is open up here, market open, and on the bottom right you can see the timer. This is real-time delivery, and my thought process is exactly the same as if it would be inside of another day. Simply monitoring for very specific things. Notice that the bodies never closed outside the price range of this candle. And that signaled to me that order flow was still bullish. And when we saw SMT right here with ES, and we formed this low at 1038, it was the sign, okay, now the time is likely here for us to begin to deliver towards the upside. Nasdaq has already reached its respective 930 opening price, whilst ES did not yet, and that's basically typical for the current delivery overall, because Nasdaq has been the leading market compared to ES. As I mentioned during my reviews as well, my focus has been and continued to be on Nasdaq over ES. Notice that we did not close above the 930 opening price just yet. Said we wicked above it and did not close. Let me see if, nope, ES didn't reach the 930 opening price neither. That's a form of SMT. At this point, the stop can be trailed, like I mentioned. It's already in a profit. I don't want to see the market roll over below this level again. We have now traded into a new range. Notice where the high comes in, by the way, at exactly 18,925. You love to see it, man. The precision sometimes is surreal, right? If the goal was to scalp, if it was to simply just take a minor run, then a run from a, let's say, a respective level to the opposing level is all one needs. However, in this case, I'm simply working within the logic of PXH and PXL, where I want to target the previous cycle's high, and I believe that it can still be reached. But if you would be someone who just wants an objective level every single time when it comes to, okay, I buy at a range low and I sell at a range high, you would have partialed at 90,025 here. I'm not giving you any financial advice, by the way, but I'm just sharing with you how one could do this. Failures to displace above the 930 opening price are a cause for concern. I'm giving it a bit more time. However, I'm preparing myself for the potential scenario in which Nasdaq will roll over and eventually maybe even take me out. If that occurs, then it is what it is. And the thing I want you to take away from this recording is nevertheless that this environment is by no means hyperable. And that shows that environment selection is key. And also within the environment selection itself, environment recognition is even more important because in my opinion, this morning session was based on the economic calendar, a day that could be rather interesting, a session that could be rather interesting. However, when the signs became present of okay, maybe this session is not going to be as clean as it might look from the economic calendar, then I acted accordingly, logged out of the live account, opened up my paper trading, began the recording, and simply stated that to you and explained why that was the case. And I feel like that's also the best value that I can provide to you, sharing with you what times this stuff is likely to work with a less deal of precision. And I could have also just chosen to walk away because that's what I normally do. Normally, I don't even bother engaging in such environments. Normally, I just, walk away and continue with my day. However, in this case, I was like, okay, I have some time. I have no real obligations that need to be taken care of. I already took care of my family so far for the day, so let's just go out here and showcase what engaging in a low probability environment looks like. And this is the type of delivery you see then. High resistance liquidity runs that are very ugly, and that's why I don't even bother in those environments. Just putting it out there. High resistance liquidity run environment. I anticipate the market to expand higher when the time is right. So far, no invalidations have been met yet. The invalidation for a continuation towards the upside would be the displacement below this upclose candle. I want to see a strong close above that 930 opening price. That really signals, okay, we're going to see speed now. Really liking this reaction. I'm wanting to see whether or not we will now draw towards previous cycle's high. I do not want to see the market roll over now after trading deeper into this upclose candle. I want to see a closure above 90,025, above this candle's high, preferably. ES is not yet trading above that high, whilst Nasdaq is. By itself, not a cause for concern, however, something to be aware of. At this point, the market should never trade below this low again, because this, basically this high to this low, is a consolidation price range. We've taken out the high now. We've displaced to the upside. We trade above the 930 opening price. I never want to see market displaced below that again, especially this BC now, that displaced through the 930 opening price. It's currently 11 a.m. and 11 a.m. is always a time at which I'm monitoring to see how the market will deliver around that time. And I do not want to see the market show any signs of real bearishness now anymore. I believe that every single retracement is being bought until it isn't. If we would displace below that low that I just mentioned, then I would get out of the position and I would call it a day. The day would probably still end around break even for then. Not a fan of the reaction after trading above this high. Final chance is this BC as outlined. Didn't annotate it properly, my bad. I will trail my stop already. ES took out the low, whilst Nasdaq did not yet. Something to be mindful of. It seems like Nasdaq is also trying to draw towards that low. Oh, I'm monitoring this candle's close. This delivery is just so ugly when you look at it. The closures outside of imbalances, the disrespect of PD arrays, the failures to create real PD arrays. The only real reaction that I deemed as nice was here, right here. This upclose candle that got broken through by a VC. Besides that, everything is just so messy. And that's exactly this environment. It's a high resistance liquidity run environment. With that, this fourth lecture comes to an end. I hope that you found it insightful, and I look forward to catching up with you in the next one. Be safe.